Yes.
Good morning, everybody. Still morning. Okay. My name is Anthony Animal. I'm with the Education Committee of Canton Washington Association. Today we'll have Mayor Caruso presenting from Richmond Viking Insurance about the flood insurance and the changes that are going to happen with FEMA. All right.
Oh, great. Thank you. Thank you very much.
We should clap.
Oh. Thank you for that. So my name is Mary Caruso. I'm with Richmond Viking Insurance. I know I have talked to you guys before. Poor Linda and Kathy have heard this so many times about flood insurance, they can teach it themselves. But I just wanted to talk about what's going on with the flood program. There are going to be some major changes starting October 1st to the flood program. And I kind of want to talk about what those changes are. Luckily, after looking at, diving into some of this information about how they're going to go through some rate changes, it doesn't seem as scary as I thought it would be. So I'm gonna talk a little bit about that. Really quickly, one of the biggest things I like to talk about is what is the difference between a direct writer and an agency and a broker. And this stands for, no matter who you go through for insurance, Allstate, Amica, those are direct writers. And what that means is it's one company, one product, one pricing. Using an independent agent means that we have access to over 15 to 20 different carriers for home, auto, flood, for personal insurance, commercial insurance. So there's much more, the client has many more options. And this is really important, especially when it comes down to flood insurance, because most direct writers, like Amica, the Allstates, they only have access to FEMA. So I'm going to start off by saying, making that distinction, because you may be working with a buyer or a seller that has a flood policy in place, and they might be paying $5,000 a year. That does not mean that a new buyer coming in can't get it much cheaper if they go through an independent agent. Every agent has different markets. Every agent has different specialties, and I'm going to just kind of touch upon that right now. But it is important for you guys to know that difference, because again, if you are working with a buyer, let's say they're a current Liberty Mutual client, and they are struggling to get a competitive rate for their new home, it doesn't mean that they can't go elsewhere and get a much better rate. So I just want to throw that out there, and I will be giving you guys some real life examples of what I mean by that. So we are a third generation insurance agency. We just celebrated our 60th birthday. We offer all lines of business: home, auto, watercraft, flood, jewelry, collections, excess liability, and all lines of commercial business. So I'm just kind of giving you guys this commercial. If you or anyone you know has any questions about their own existing policies, or you know someone that might need a quote, please send them my way. I'll be the first to tell them, you know what, you've been with Amica or USAA for 25 years. I can offer you maybe $150 difference. You should not move to me. You should stay where you are. You have the longevity, they're a great company, you have good endorsements, and I'll be the first person to tell people to stay where they are. So I'm going to go into flood, and before I play this little video, the way that the flood program has always worked, and this is the part that's changing, is that the pre-firm homes, so pre-firm means any home built prior to about 1974. There's pre-firm and post-firm. Post-firm is any home built after about 1974. Those post-firm homes, historically, we were never able to provide flood quotes without an elevation certificate. Has everybody seen an elevation certificate and know what they measure? And stop me if this is all, you guys know all this stuff already. But the elevation certificate measures the true risk rate of the home. And what that means is it's measuring the top of the bottom floor, so the basement, the crawl space, the slab, and what's the high water mark? Where exactly could the water come flooding into? And that difference in elevation is what drives the premium. So, for example, and I can pass this around, I'll just take the client's name off. This is a flood quote that I had done when FEMA, it was a regular program. This house, the base flood elevation is 19 feet. It's 18 feet, but for a VE flood zone, They always have to be at least a foot above base elevation. The top of the bottom floor is 7 feet. So this house in particular was negatively elevated by, over 10 feet. The rate for this house, and it went on the market, it was about a $450,000 house. The rate was $28,000 a year. So that obviously put a big damper back in like 2012, and that's when the whole bigger waters, and I won't bore you guys to death with the different government subsidies and programs and how things have changed. But the flood program, it is what it is. You couldn't shop flood rates around, and that's kind of the way things had worked. Nowadays, as of the last few years, private flood markets have just flooded the industry. Sorry, my bad insurance puns. I'm a big insurance dork now, unfortunately. But private flood markets don't use these elevation certificates, even if the home is new construction. Certainly if somebody has one, they can help the rate, but they don't use them for rating. They use all this different statistical data, the year built, how many floors above ground, does the house have? What's the true replacement cost of the home? And meanwhile, back in the day, FEMA only really asked, do you want the $250,000 for building and contents, $100,000 for contents, or like just how much coverage do you want? And the rate was really driven by that for the subsidized rates. So what FEMA has decided to do is get rid of this requirement for post-firm construction homes, because again, what this elevation certificate is detailing is, was the house built in compliance? Did the builder build it high enough? That's why you'll see new constructions up on piers, post pilings, those homes, a lot of homes in Westerly, homes in Narragansett, they're built so high up to mitigate that flood. The elevation certificate also does check to see in AE flood zones, and there's 2 high-risk flood zones. In AE flood zone, you'll see a lot of those in Warwick, that's more riverine flooding. The VE flood zones are those velocity flood zones where it's wave wash. Newport, Narragansett, basically from Tunic down in the state, a lot of those are VE flood zones. And those are the premiums that were astronomical. This house that I was just speaking of, and I can pass this elevation certificate around just so you can see what it's detailing and what it's trying to map out for a rate. So the 2 mitigation features that will help the flood rates are breakaway walls. So you'll see homes that are elevated and then they have the lattice around, or breakaway walls. And those are made to basically just break down if there's wave wash. And what that does is it eliminates the concern about water infiltrating the foundation and causing the foundation to crack. Therefore, the house could be condemned if it falls in the water, falls in the sand, and also flood vents. In the riverine flooding in Warwick, most of those AE flood zones, you get a great break in the insurance pricing if you have flood venting. And again, that's if it's a crawl space or a slab, they want that bottom first floor to have at least 2 flood vents so water can flow in and flow out, and it's not going to crack the foundation. A lot of comments I do get from clients are, there's nothing in the basement, there's certainly no furniture, no contents, I don't care if it floods and I don't want to insure it. That's fine. Or the mechanicals are down there, if I just move the mechanicals up, will that bring my flood rate way down? And the answer to that has always been no, it's not going to touch the rate, because FEMA has always rated policies based on, again, the top of the bottom floor. Is it a finished basement? Is it an unfinished basement? Is it a crawl space? Is it a subgrade crawl space? There's like so many different possibilities of rating with flood. It has become, pretty cumbersome in underwriting flood. But a lot of clients will say, you know what, I don't care. I don't really need flood insurance. Well, if your house is in a flood zone, you need flood insurance, whether you care about your things in the basement or not. And the reason why even an unfinished basement can be expensive is because flood underwriters are not concerned about your contents down there. They're concerned that the hydrostatic pressure of the water that might inundate that property will crack the foundation and the house will be condemned. I was living in New Jersey for 10 years, over 10 years. I was there during Hurricane Sandy. I am absolutely nowhere near a flood zone. I had 4 feet of water in my basement twice, Hurricane Irene and Hurricane Sandy. And of course, I have flood insurance now. Luckily, we were able to dry out the basement, but you know, my oil tank is down there. If that water pressure, you know, if it got any worse, I mean, there's scenarios where the oil tank could be ripped, then you have a whole other problem on your hands with fuel spillage and things like that. So, and I know I'm kind of throwing a lot of information out to you guys, but the way flood has always been rated are these subsidized rates. I'm sure you've heard that term, subsidized rates. What is that? That means that, you know, you and I are neighbors, and both of our homes are pretty firm, so they're built, let's call it in the 60s. You have a finished basement and I do not. I'm on a slab. But you and I are paying the same rate, but you have a higher risk because you have that, you know, the water's gonna pool somewhere, it's gonna pool in your basement. So those subsidized rates are just the government's way of saying, okay, we're gonna give you a policy, this is a subsidized rate, and literally they were the same rates. But if your house, let's say, had 2 flood losses already, and I never had a flood loss, why are we paying the same rate? So they're doing away with all of that, and that's why they're looking at any prior water loss claims for flood. They're looking at the year bill of the house. And again, I don't have any examples of what the rating will be, but this little video is gonna talk about the technology that they're using to make this change starting October 1st. And then I have another slide that will detail, you know, what's the potential for these, what's gonna happen to the rates that are currently out there for all the subsidized housing.
Mary, can I ask you?
Yes.
Are they going to get rid of the A, VE, AE zones?
That is a great question. So as of right now, they are gonna get rid of, like banks will still need to see that letter, the A or the V, on a deck page, I'm assuming, in order for the, and you might know more about it than that.
That and the flood service, we'll pull both of them.
Yes, so I don't know how that's gonna change the mortgage underwriting piece because they are not using just the flood zones for rating. So that's a great point, and we'll know more coming up, but here's just a little quick video. Here are the volume. Does anyone want to see this elevation certificate in the meantime? I can pass it around if anyone cares. Thank you.
Today, we're leveraging that data along with cutting-edge technology to get a better understanding of
Sure,
the
can you
risk.
start it again? Yeah.
Flooding, it's the most common and most expensive natural disaster in the United States. And flood risk varies, no matter where you live. FEMA has spent decades investing in high-quality mapping data to help inform flood risk and set flood insurance rates. Today, we're leveraging that data along with cutting-edge technology to get a better understanding of your property's unique flood risk and how that risk can be reflected in the cost of your insurance. FEMA will consider your home's distance to a flooding source, the types and frequency of flooding, and property characteristics such as the cost to rebuild. With more data going into assessing your flood risk, you'll have a more complete picture of what goes into the cost of your flood insurance. We're making flood insurance fairer and easier to understand to help you protect the life you've built. Learn more about this effort and the benefits of flood insurance by visiting FEMA.gov/NFIP transformation. Inform flood risk and set flooding. It's the most
Sorry.
flooding. It's the most common and most expensive natural disaster in the United States. And flood risk varies, no matter.
Now, will it, if you hit
You guys do not have to go ahead and read this slide, but this is, just a few things to point out. This kind of details where the flood policies are enforced mostly. Obviously, as you can see, it's down towards the southern end of the state. And they basically are calling this NFIP transformation risk rating 2.0 will make things more even for premiums and clients. So what that means is, you know, if you're waterfront and I'm not waterfront and I live 3 streets down, why are we paying the same? Because the flood risk for the house is right on the water. So that's how their new rating, everything's gonna be geocoded, addresses will be geocoded, and another main factor will be the cost to rebuild the home. Because as of right now, the traditional flood policy, whether it's through FEMA or private flood, the maximum that you could take out is $250,000 and $100,000 in contents. If you have $1 million home, then $250,000 isn't going to do much good. So to rebuild, if God forbid the home gets severely damaged from a flood risk. So they're also using that as a new rating factor, but hopefully what we will see is that those VE flood zones, those rates won't be $10,000 a year. They might be less. And this information basically states that there will be for 46% of policies, there will be a decrease in their premium, which is good. So I was really worried about what this was gonna look like for clients. Yeah, so almost half of policies will see an immediate decrease in premium. 47% will see a small increase, and they're talking maybe $120 a year. And then 4% of policies will see, let's see, $120 to $240 per year increase, and then 3% will see over maybe a $240 increase per year. But not astronomical, which is great.
Mary,
Yes.
do you know what the risk rating is for Connecticut and Mass?
I don't, but I can find
Just
out.
out of curiosity, I wonder if it's, the same.
I think it all depends on the community. I think every community is gonna be a little bit different, but I can definitely look into that.
But for all of Rhode Island,
Mhm.
it's 2.0.
It's not a 2%, this is just the name of it.
Oh,
It's
that's just
called-
the name
Yes,
of it.
risk rating 2.0. That's
okay.
how they've
I'm
coined
sorry.
the difference. No, that's a
Okay.
great point, I should have brought that up. So hopefully this change starting October 1st will not be awful. It seems like a lot of clients will actually do better because again, they're paying the same amount as someone who might be waterfront, and hopefully they will, they'll get some premium relief with that.
So this is just with government insurance?
Yes.
Okay, now will that carry over into the private sector too? Okay, sorry.
No, that's a great question. So, 97% of current policyholders, 97% of current policyholders' premiums will either decrease or increase by $20 or less per month under the new risk rating 2.0. So, at least with the FEMA products, it's hopefully not gonna be as scary. I'm gonna back up from that in a minute. Now I'm gonna kind of flip over and go over private flood and what are the differences there. Private flood has been working on a model where they don't just use flood zone. They don't do, they use the same type of premium measuring or underwriting that FEMA's going to. And this is because I think the National Flood Insurance Program, with all of the natural disasters, they have been basically paying out billions of dollars in claims money that they don't have. So I think in the not too distant future, FEMA will probably be getting out of the flood business altogether. It is not profitable, they keep losing money. So private flood has, and most of these private flood policies are underwritten through Lloyd's of London. Lloyd's of London is, they were established in the late 1700s. They're a huge global insurer. They can absorb more risk than the government program. Their rates have been so fantastic, and just to give you guys some differences, I have a client who lives in Narragansett right now, and his premium with FEMA is about $12,000 a year for his flood policy. I just wrote him with private flood, the same policy limits, same deductibles. My premium is $1,300 a year. He saved $11,000 a year.
I hope he took you out for dinner.
You know what? He didn't even pay the bill yet, and that's another story. But no, that is significant. That's not like a one-time, here I'm gonna save you $11,000. That is $11,000 a year. So private flood has been using this same model, and I think FEMA is now moving its model to be very similar to that of private flood. Again, I don't know what is gonna happen with the government program, but I have not written a FEMA policy in years, honestly. I gotta watch how I say it, but as a realtor, you know, the two things that you should always ask for if you are listing a home in a flood zone is a copy of an elevation certificate or a current flood declaration page, because then that way you see what kind of coverage does the seller have. So for example, seller's been in their house for 20 years. They're only carrying $100,000 of flood coverage. So the buyer thinks, oh, I'm just gonna assume that policy. And I'm just giving you kind of some different examples of what I experience on a daily basis. So for a new buyer coming in, and they're not aware of private flood, or their lender won't accept private flood because maybe it's a VA loan, maybe it's an FHA loan, and that's a whole other conversation to have. So let's say they have to have NFIP flood for their mortgage. Because remember, flood insurance is a mortgage requirement. What I've seen happen is a buyer coming in will say, I want that $1,300 rate, and that's great. I'm not gonna look any further. I'm gonna assume the seller's flood policy. So then, fast forward, all the docs go to their mortgage underwriter, and it doesn't qualify. It doesn't qualify because the client is buying that house for $300,000. They have over $250,000 mortgage. That $100,000 in coverage is not going to be sufficient for the underwriter. And I've seen this happen super last minute at the nth hour. So if you're ever working with a client, and I would still continue this for the foreseeable future, ask them for a copy of their current flood declaration page from the seller. So if you have a listing or you have a buyer coming in, ask for that, because they may say,
what if they,
well, if they have flood insurance, they're
what
going
if
to
they
have to have
don't
it.
have it?
Okay.
Their insurance
Hold it
company,
for
their
you.
insurance company's gonna have it.
Yes. So if they don't have flood insurance.
What if they have no mortgage?
What if they have no
Right,
mortgage?
yeah.
How do they get the
So then they
flood
won't have,
certificate? I mean, the elevation certificate, what's the cost of those now?
you get those through a surveyor, a land surveyor. Yeah, $550 to $600 maybe, depending on the type of house. But I would still be asking for that information, because we've seen a lot of situations where you've heard the term grandfathering, and that term gets thrown around a lot, and it's not always being used accurately. And what I mean by that is, if, let's say your seller has an existing flood policy in place, and they were in Warwick, and they had an AE flood zone policy, it was in effect. If the Army Corps of Engineers, who just remapped all of Rhode Island back in 2013, if they then deemed that house was now going to be in a VE flood zone, that existing A flood zone policy is going to be cheaper than a new VE policy. So for a buyer now buying a house in a VE flood zone, that rate is going to be up here. So for them, they should grandfather that existing policy to the buyer, because that zone has been grandfathered. So that gets used.
So that's gonna be allowable? Do we know that?
As of right now, it's still allowable.
Okay.
I'm not sure what'll happen in October.
Okay.
So Mary, in this crazy market, there's been a lot of cash buyers.
Yes, yes.
So a lot of those cash buyers are buying homes in flood zone
Mhm.
areas.
Oh, yeah.
You buy a home paying cash,
Mhm.
you don't have to get flood insurance.
Great point. So what ends up happening is depending on who is writing the insurance on the homeowners, many times now, the homeowner's insurance company will require that client to carry flood insurance. Because what they're seeing is, let's say there's water damage to the house. Is it a flood? Is it wind-driven rain? You know, what is the source of the flooding? Is it just a high water table? So homeowner insurance companies are saying, okay, well, if I need to rebuild this house from the ground up, and that's my promise, when you pay me my premium, that's my promise. I wanna see if it's in a flood zone, the insured better carry flood insurance, because I don't wanna then go through, and we always tell clients, flood is always separate. We make every client sign a waiver that they understand that flood is always separate. But a lot of homeowners insurance companies will require that underlying flood limit. And again, with private flood, it's not very expensive. Those private flood policies also cannot be transferred to a buyer. They're absolutely not allowed. But the rate for a new buyer coming in is gonna be the same. I haven't seen one situation where, unless it's the occupancy, if it's a rental property versus a primary, it might change maybe a couple $100, but nothing significant. Because with FEMA making that one change, it could be $2,000. So, and I know I'm talking a lot at you guys, and I don't mean to.
No.
I feel like
Good
it's word
information.
salad at this
Good
point.
information.
I have a client who's still dealing with FEMA down in Squamicut
Oh,
on fighting them because they haven't paid out since
Oh.
Sandy.
really?
All the total amount, yeah. So,
Wow.
you know, I feel as far as having FEMA coverage, $250, forget it, go through the private party.
Yeah, and that's the thing, I mean, and so one of the reasons why, depending on what type of loan product you have, some banks do not allow these private flood markets, because Lloyd's of London, they are what we call an excess and surplus lines company. They're not part of the state insolvency fund. So I think from a bank underwriting, again, Anthony could probably answer this better than I can, but the bank is worried about, okay, if Lloyd's goes under, there's no recourse for the client. But if Lloyd's goes under, again, they've been around since the 1700s, literally the world is gonna be ending, it's gonna be like one of those Will Smith movies where just horrendous natural disasters. But as of right now, FHA loans, VA loans, some of those can be tricky with a private flood. I have had some go through. I think it really depends on your lender. Picking a lender, if you're in a flood zone, is kind of a very important decision to make.
So what is VA?
VA, oh, the veterans.
Yeah,
the
but
veteran-
what do they,
They want FEMA policies
they want
also.
FEMA policies?
Yes.
FHA
Yes.
too as well.
FHA.
FHA too as well.
Yeah.
And certain, Fannie and Freddie can be, it depends on the lender and their interpretation of the guideline directly.
Well, and what's interesting is that all of these companies that we work with for private flood, their private flood, the Lloyd's syndicate that is underwriting the flood product, they're all A and A plus rated. So sometimes we send a bank information sheet to the bank, and they will accept it because they see that basically the contract mimics and is a follow form to FEMA's product, and that it is an A plus rated company. So some banks have accepted that. And let's see here. Another question that I do get often is erosion. You know, people are buying these waterfront homes, and they're like, well, what happens if, you know, with the sea level rise, you cannot insure land. You can't insure, and I had a client once buying a beautiful, beautiful waterfront home in Westerly, and he said, well, what am I gonna do if, you know, erosion basically takes my entire backyard out? So you cannot insure for that, unfortunately. So that's been a conversation that I've had recently with some buyers that wanna know if somehow we can insure that, and you cannot insure against erosion.
Can I ask you, Mary,
Yes,
what
please.
about a lot of these houses, cottages have basically been totally renovated? Okay, yet they're still showing on the tax records 1946. How do insurers look at that?
That's another great question. So what usually happens is, and I'm sure that you guys have heard this in the past, that if somebody does just too much work to their house, for flood purposes anyway. Let's say they have it's a 500 square foot beach cottage. Someone buys it, they double it in size, fancy features throughout the house, and now the appraised value of the house has gone from, and I'm talking back in the day what home prices used to be prior to COVID, but somebody was gonna buy, $500,000 for, a shack and a tunic, and now they have gone and doubled the size of this home and upgraded it, all the systems, moved the mechanicals up, and now the value of that home has exceeded more than 50% of the original value. That house now has to be rated as post-firm construction, and you're gonna need a copy of the elevation certificate. Now, chances are that home has not been, the foundation hasn't been raised. So that house that once maybe it was $1,200 a year in flood is now gonna be $5,000-6,000 in flood, because it's gonna be post-firm constructed, meaning we have to have an elevation certificate. And usually the town will make you do that. And now it's a whole different ballgame with the rating factor, because it's no longer pre-firm subsidized rate. It is now a true risk rate, and usually that discrepancy drives the premium way up. Any other questions on that?
Mary, can you get flood insurance on leased land?
If there's a structure that you own, yes, you can. Yes, you can. And people, I've seen all sorts of situations where someone on the 4th floor of a condo needs flood insurance, because if that structure is at all in a flood zone, whether you're on the 50th floor, and my prior life coming from New Jersey, ton of flood zones, especially in the Fort Lee area. I had someone who was like on the 50th floor, and they still needed flood insurance because a portion of that foundation was in a flood zone. So you see what just happened in Miami, that entire condo building. And God, it's awful, 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 awful. But with sea level rise and erosion, look at what happened. So that's why those individual units need, and I'm just saying flood for this example, but these natural disasters and climate change and sea level rise, and it's all very real to what's happening with the soil. Even after, if we've had a drought, and a lot of floods happen, you don't expect them to happen. You don't expect them to happen in your house because you're, like I said, nowhere near a flood zone. But what ends up happening is, we don't have, unfortunately, we've had so much rain this summer that this is not the problem we're having, but in certain areas of the country, it's so dry. It's so dry, so when there's flash flooding, the ground cannot accept all that water, cannot seep in. It's just too dry. Same thing in the spring when the ground is frozen. The ground cannot absorb all that water, and it just goes right into people's basements.
And you can get flood insurance for that?
I was just gonna ask that.
Yes, so you can get any house, whether it's in a high-risk flood zone or not, can get flood insurance. And honestly, like 30% of flood claims are for homes that are not even in high-risk flood zones. So,
But it'll cover like groundwater.
well, it
Like
depends
The
on.
big storm we had, was it 2013?
10.
Yes.
People
10.
lived on hills and water just,
Yeah.
water had no place to go.
So if it's a matter of an inundation of water coming into your house, yes, that's considered a flood. If you're the only one on your street because you have a crack in your foundation, that's not a flood.
Or it seeps up through the ground?
Seepage is not technically covered.
Okay.
But if there's a tremendous amount of rain and you see rain pooling in your yard, your neighbor's yard, take a picture, that's considered a flood. If that water has, and again, that's what happened to me during Hurricane Sandy. It's interesting how when you live through that, you're like, I'm not gonna live at the bottom of a hill and ever again. Because that's everyone's water came into my basement. I'm like, oh my God. And interestingly, as a side note, we ended up getting a water pump that runs off of water. It was a sump pump that is not tied to electricity at all. So the more water you have down there, it pumped everything out. I didn't even know that that existed. It was like $500, well worth it. I'll put that in my next one as well. But yeah, so there's, and again, I don't mean to throw out so much different information, but so I think the gist of it is FEMA is changing the way they're underwriting policies, the way they're rating policies. It might not be as scary, but these private flood markets are excellent, and you can only get them through a broker, through an insurance broker, an independent agent. You know, we work with like 4 different ones. So there are a lot of options for your clients out there. So again, don't panic if you're working with a buyer and the seller's paying X amount of dollars. It doesn't mean that the buyer still will not be able to afford that home, because again, the rate differences are so massive with private versus FEMA.
I know this isn't, I would think house that's in a flood zone or by the water. What about hurricane, wind?
Great.
I know that's not part of your.
Oh no, that's one of the last slides. So.
Oh, okay.
Stay tuned.
That's a whole other story. Hurricane, again, one of the biggest differences using a direct writer versus an independent agent. Hurricane claims are, you know, they're fierce. They're fierce. And whether it's wind, so there are some carriers out there that call it a wind deductible,
Yeah.
some call it a hurricane deductible, some call it a named storm deductible. That's really super vague, right? We work with many carriers that don't require any hurricane deductibles, even on the water. So it really is going to vary depending on who your insurance company is. And for example, especially in the Newport area, parts of Warwick, if you're within 5 miles from the water, Liberty Mutual, usually, Allstate, definitely, it's a mandatory 5% hurricane deductible. And nobody really realizes what that means. Let's say you're working with a buyer, and whether it's a first-time home buyer, they're scraping nickels together to get this house. They move in, they go with Allstate, and I'm not bagging Allstate, it's just their policy form. They don't realize, because their agent never explained to them what a 5% hurricane deductible means. They're buying a $400,000 house. A month into their home ownership and into their policy, there's a massive hurricane that comes in. That client is going to be responsible for paying out of pocket, and it could be a tree falling on a roof from wind, it could be anything. That client is going to be responsible for paying out of pocket the first 5% of the dwelling replacement cost. Not of the claim, but of the dwelling replacement cost of their home. Oh yeah. That, I don't know about you, I don't have that kind of money laying around in case a tree falls on my roof. So again, that's one of the biggest differences of using a direct writer. And I don't know about you, but I explain this to my clients. Like I should say, I don't know about other agents, but I explain this. You know, same thing too, when you call Geico. You're not getting a Geico home policy. You're getting a home policy that might be, depending on what state you're in, through Travelers, through Narragansett Bay. But is that person explaining the difference, or are they just trying to sell a cheaper policy? Because the higher hurricane deductible or wind deductible you have, it helps lower that premium because you're self-insuring for a huge amount of money.
I'll bet you $1 they don't explain that.
They don't.
Of course they don't.
No. Part of my job, I have to, and I want to, because guess what? I don't want to be getting phone calls that's going to happen when somebody tries to make a claim. I never give her. I mean, some houses have to have a hurricane deductible depending on how close you are, but I'll maybe put a 2%. But other companies are putting on 5%. But I at least explain that to the customer.
I have a question.
Yeah.
Might be getting ahead of, maybe you're gonna cover this. So let's say you've got a home, whether it's a hurricane, whether it's let's just say there's a claim that comes out on a home. You sell the home a month later, new buyer comes in, buys the home, and when they go to rate an insurance policy, is it true that the claim from the prior owner affects the new owner and what they have to pay because the claim is on the house?
Great question. So that's called a clue report,
Yep.
and a clue report is run not only on the house they're buying, but also on the buyer buying it, because they're looking to see, okay, does the buyer have 3 mysterious disappearance claims? Or,
So they're running both.
they're running both, and so, you know, same thing too. When you call Geico, you're not getting a hurricane deductible The tricky part comes in, a buyer coming in should not assume any risk for a prior seller's claim. The part that would cause trouble if there's been multiple water claims or how large was a water claim. And this is really only with water, because where there's water, there's mold. And the insurance company is scared that, let's say a new family comes in, the children get sick, and that happens. You know, there's black mold in the walls that nobody knows, and you know, someone winds up in the hospital. And that type of scenario could happen. So a buyer should not be affected by a prior owner's claim, but they will want to know what happened, has it been remediated, and they might, depending on how large the claim is, might want to see some proof of that. You know, did you really get it? Did you open the walls, clear out the mold? You know, but that's a good question. But no, like, so if that scenario comes up, I'll call my underwriter and say, I'm deleting this claim, because they're gonna see it. I'm gonna delete this claim because it was not this owner's property at the time. So it wasn't their negligence. And a lot of claims are not negligence, it's just, you know, and so a lot of homeowner carriers now, especially with secondary homes. So if your primary home is in New York, you're buying a secondary home in Westerly, they want to know, okay, well, what's going to happen in the winter? Are you going there? Is it going to be occupied? Because if it's not, New England winters are pretty horrible. Frozen pipes. I mean, we've had situations where a client has come home after being away for 2 weeks, and there's an ice rink in their living room because a pipe burst weeks ago, and it was never found. So there's all sorts of things you could do to your house now, like water detection leak systems and low temp monitoring systems and things like that, that help reduce the premium for your homeowners. And it's safe. People should have it. So a lot of insurance companies are now giving discounts where they'll say, you know what, if you get this low temp monitoring system installed, maybe it would have been $1,000, but we'll pay $500 of it. Something like that, because it benefits everybody. And
Can I ask you a question that might have something to do with flood insurance? What's your feeling about independent appraisers?
for insurance claims,
There's been a big push to have your own appraiser come out,
you know,
hire somebody.
I think it really all depends. The issue with that, you mean a public adjuster?
Yes.
So if you hire a public adjuster, good, bad, or indifferent, they're out there. If you hire a public adjuster, you can no longer have communication with your own insurance agent about the claim. That's the bad part. They take over.
Okay.
So I think sometimes I've heard some feedback that a homeowner doesn't know exactly what's happening with the claim because you're forfeiting your rights to be the main point of contact when you hire a public adjuster. And you know, I don't know, we haven't had too much experience with that, honestly. I can't really speak to too much more about that because claims is a whole other ballgame and you couldn't pay me to do that. I'm gonna switch gears just a touch as we're talking about claims, what's covered under a homeowner policy, what's not, because people have asked me some questions about, let's say, flooding inside the house without any kind of weather event. Burst pipes, you know, is that covered under your homeowner's insurance? I'm gonna talk now about high value markets. And I think this is important because as you guys are out there, you might be selling a house in East Greenwich, wherever, and the house is, let's say, over 3,500 square feet or over 4,000 square feet. Does a traditional insurance company or a homeowner policy, does it have the right endorsements to be able to insure a high value property? And a high value property means that they have a rebuild amount of $1 million or more. Most standard insurance companies, when you start getting into that $1 million rebuild figure, which is not hard to get to in Rhode Island, the custom kitchens, this, the that, the heated flooring, you know, Meridian Builders, Davitt, those are all $1 million plus. Whether you're paying $1 million or more, you know, someone might be paying $700,000 for the house, but the true rebuild, and I had that scenario in East Greenwich, a buyer came in, bought a house for $750,000, but it was a 5,500 square foot, beautiful home, and the cost to rebuild was $1.8 million. So you can't put them with just a standard company. And I'm gonna kind of show you the reasons why. And there are 5 main policy differences when you get into that $1 million mark. Guaranteed replacement cost. That means that if the house burns to the ground, and let's say, especially like now with COVID pricing for lumber and everything else, trying to get somebody, a builder to come up to your house is like impossible these days. So God forbid if your home just burned to the ground, where are you from a price per square foot now rebuilding that home versus where were you 20 years ago? It's going to be very different. Guaranteed replacement cost is an incredible endorsement that is offered through some standard middle market companies, and I try to give it as much as possible. And I'm going to show you some pictures that kind of speak to this. Unlimited water backup. You have a 4,000 square foot house. Most standard insurance companies cap the water backup at 5,000. You have a third floor or second floor bathroom, and there's a plumbing issue, and it leaks down to the second floor, into the basement. $5,000 of coverage is not going to do much. That's hardwood flooring, that's ripping up ceilings, etc., etc. Unlimited loss of use. And again, I'm just using this just to kind of point out the differences, because I see all the time people are buying $1 million+ homes, and they might be using an Allstate or a standard middle market. And like, this really, it's not going to give you the amount of coverage that you need for this type of home. But loss of use, if the house burns to the ground, or let's say you have a kitchen fire and you need to move your family out of the home. Some insurance companies cap it as a dollar amount that they're going to give you to stay elsewhere, but you might be in a Howard Johnson's and not a 5,000 square foot home. So you got to make sure you know what you're getting when you have a high value home. Also, some other companies cap it as a specific time frame. You get 1 year and that's it. Well, you know how backed up things are. So unlimited loss of use when you have a family is an unbelievable coverage. Cash out payment option. You don't want to rebuild your house where it is. You want to take the $2 million that your house is worth and buy a yacht and sail around the world. You can do that. Hurricane deductibles. Again, just some differences with even some of our high value markets. Waterfront homes without requiring hurricane deductibles. That's a really great feature and a really great option. So guaranteed replacement cost. And this is something I see on a daily basis. People are like, okay. And this, honestly, I think about the multifamilies in Providence when I see this picture, because people buy multifamily in Providence maybe for and I'm just throwing numbers out there, $250,000. But it's a 3 or 4 family home, and the cost to rebuild that house from scratch would really be, I don't know, $700,000. But they don't want to pay that. They want to pay to insure for $250,000. But honestly, whether it's a larger home, whether it's a multifamily, that's going to be as far as you get to rebuild it without having enough coverage. And people say all the time, I only want it for the mortgage amount. Well, you're not going to have enough coverage. Unlimited water backup. I don't know if any of you have ever experienced a water backup claim, but they can be really nasty. Sewer, septic, it's flowing right into your house. My parents had one. It's not pretty. It's not fun. And again, most standard insurance companies cap that at $5,000. On a larger home, $5,000 isn't going to cover much. Look at this. Look at the type of house your buyer's buying, and again, it's always a great question to ask. Who are you using for insurance? Would you like to get a free quote? There's no obligation. It doesn't hurt them whether it's through our agency or another agency. Give them options, because they probably don't know that there are options out there. Unlimited loss of use. Again, just like I talked about, if your family needs to relocate out of that house and you have 3 kids, you don't want to be crammed into a small hotel room for a year. What could potentially be a year. And again, this, when you get into the high value markets such as AIG, Pure is a fantastic coastal high value market that we have access to. I used to write with them all the time in New Jersey. In fact, when I moved to Rhode Island, it was very strategic on my part. I would only go to a broker that represented Pure. Pure specializes in high-value coastal homes, and this is their specialty. But you will be put back in a like kind of quality home, and even if that means that they're going to rent you a 5,000 square foot home. Cash out option. Maybe you don't want to build. Again, maybe you just want to get out of the area. Again, you can take the money and run, but those are special endorsements specific to certain carriers, again, the high value markets. Hurricane deductibles. Again, most people buying homes haven't read the fine print. They don't realize that they're going to be paying 5% of the dwelling replacement cost. Again, we don't want to have to put on hurricane deductibles for anyone's policy. It's a huge expense. Depending on where the home is, oftentimes they might have to have one, but you want it as low as possible. When we get into our high value markets for coastal homes, oftentimes they're optional if the client wants to choose to self-insure, but it's not mandatory, and that's the important part. Oh, that's my info. If anyone has any questions, we're kind of almost at the mark. What questions do you guys have? I know I kind of ran through a lot of general information. Yeah? Did I? Yeah? Okay. I know I was talking a lot. Please feel free, call me, email me, if any of you guys have any questions at all. You know, I would also pull out your own policies. You know, just as homework. When I first got licensed, I pulled out my policy. I was mostly shocked at my auto. I couldn't believe that my prior agent had me driving around with state minimum limits. I did not know that. That's a whole other conversation. But yeah, call me if you guys have any questions, okay? Thank you.
Thank you.
Are you being passed around the survey for the presentation? Please feel free to fill it out. And there is also a question if there are any other topics that you were looking for additional information for in the future. The education committee is always looking for new ideas moving forward that we can present on a monthly basis. We do present once a month. I'd like to remind you all these utilities are now being saved and they're on our website. So all the past ones that you might have missed too are also on there. You can read them. If you're up for coming, I look forward to seeing you guys next time.
Thank you.
I brought these two. We're doing some targeted mailing. My agency's doing some targeted mailing in a lot of flood zones. This one happens to be North Kingstown. You wouldn't believe how many phone calls I get from clients that they're like, how can you lower our flood insurance? In Whitford, yeah. Yeah. So if anyone wants a copy or two to bring back to your office, I'm gonna leave some here.
I'll check with the bank to figure out, I'll give you that information.
Okay, great.
Let you know how